This is a Stock Newswatch report.
Almost 2 years ago, we introduced you to STWA, publicly traded as ZERO, and their AOT technology. At that time, ZERO's stock traded at just 22 cents a share. Since then, ZERO hit a high of $1.90 a share and is currently trading in the 90-cent range. We believe that the ZERO stock is ready to make another major move upward. Let us explain why. ZERO's AOT technology, developed in conjunction with Temple University, has proven to be a game changer in the pipeline industry. AOT has been tested multiple times at the Department of Energy and currently is going through the required testing in China for implementation. The AOT results in these tests have simply amazed oil industry insiders. The AOT test results have been so impressive that ZERO has announced that they are in AOT implementation talks with 7 major players in the United States alone. In fact, ZERO started and completed the first commercial production of their AOT unit. ZERO's management team must be very confident to start building inventory for prospective orders and implementation of AOT. Remember, the pipeline industry in the United States alone ships 14 billion barrels of oil yearly and is a crucial backbone for the U.S. economy. Pipelines also offer substantial cost benefits over any other oil transportation mechanism. ZERO's AOT technology offers this trillion-dollar industry 4 benefits they can't find elsewhere. They include: Number 1. Reduced energy costs. AOT can help these pipelines substantially reduce the energy costs needed to run oil through their pipelines. 2. Reduced greenhouse effects. The pipeline industry has spent $71 billion over the last 10 years to reduce greenhouse effects. The AOT technology will help them attain this goal. 3. Increased throughput. AOT helps substantially increase throughput, making the pipeline more effective. 4. Reduced pipeline pressure. AOT has shown to reduce viscosity by 56%, greatly reducing pipeline pressure, a major benefit to the pipeline operators. We believe these 4 benefits translate into hundreds of millions in yearly savings for pipeline operators. Currently, $10 billion is spent yearly on pipeline projects in the United States alone, and we believe each of these operators would be smart to implement AOT into their pipeline plans. To be competitive, it seems to us they have to use AOT. ZERO also just released an update in regard to their plan for a NASDAQ listing. It sounds like they got most of their requirements done and will shortly be completing the rest of the requirements to list their stock on that exchange. They also greatly improved their cash position and balance sheet. Listing on the NASDAQ, we believe, would cause ZERO share prices to increase drastically, as some mutual funds that are currently prohibited from buying ZERO because of their exchange listing would now be able to do so. We also still believe ZERO and their AOT technology is an acquisition target. ZERO, with roughly 150 million market cap, up almost 500% from our first feature, is still very undervalued in our opinion. ZERO is likely undervalued because, simply put, there is no traditional valuation tool we have found to fairly value ZERO's AOT technology at this phase in their business model. Looking at some of the major players including ExxonMobil, 400 billion market cap, BP, 137 billion market cap, Chevron, 238 billion market cap, TransCanada, 34 billion market cap, Enbridge, 38 billion market cap. We could easily see any of them trying to make a move to acquire ZERO. In closing, remember the advice of Warren Buffett: invest in areas that are crucial to the economy and are in no danger of being replaced, and look for undervalued growth opportunities. We think ZERO and their AOT technology fit this criteria perfectly. For more information on ZERO, visit their website at www.stwa.com.